The headlines have been quite negative for cryptocurrencies in recent weeks, and coming at a time when the sentiment in the broader financial markets has been weak, coming after a long period actually where we have seen risk assets falling quite considerably really over the course of this entire year as a result of high inflation and interest rates rising quite aggressively. It's really compounded the difficulties that Bitcoin and other cryptos have had. As I say, the headlines in recent weeks, whether that be Three Arrows Capital or Celsius or Binance, they have just been coming one after another. And it's hard to imagine a scenario where we don't see more coming in the coming weeks and months as well. And as I said, against the backdrop of such a difficult environment for other risk assets, and Bitcoin still is seen as the ultimate risk asset, it does make life very difficult as far as Bitcoin is concerned. We've already seen some big levels broken, and we saw another big level broken over the weekend, which could make people very, very nervous. If we take a look at the Bitcoin daily chart here, you can see the levels I'm talking about. The one that was broken recently, even a few weeks ago, was 30,000. And the difficulty with the break of 30,000 was that there wasn't really much between 30 and 20,000 based on these historical levels that you could see as being clear and obvious support. That's because it only spent a couple of weeks in this void after breaking above 20,000 late in 2020. And in the aftermath of that, it stayed above 30,000 thereafter. So the break of 30,000 was a worrying sign. While we did consolidate after that initial breakout, once it broke properly a couple of weeks ago, you can see how quickly it then fell back towards 20,000. And 20,000 now is a really key level as far as Bitcoin is concerned. We saw it break below there over the weekend briefly, and it has rebounded back. But even with that rebound that we have seen back towards 20,000, I still think Bitcoin is looking very vulnerable for the reasons I've outlined before about the financial markets not favoring risk assets and the headlines, etc. But also then from a technical standpoint, because we saw that break lower over the weekend, we've seen a big technical level ultimately broken, and now we're literally seeing it tested from the downside. And that could make people quite nervous. We are trading a little bit above here at this point in time, but I still think this is a level that looks very vulnerable. And I think a move back below 20,000 now over the coming days or weeks could see much sharper declines. The difference between this time and the break below 30,000 is that there are clear technical support levels below here, which could potentially slow any decline that we do see, which we didn't get following the break or the re-break of 30,000 a couple of weeks ago. The levels I'm talking about in the chart here, around 17,500, you can see going back to late 2020 was a notable area of support. So that could be potentially a first area of support here. 16,000 to 16,200 again was actually support and resistance back in late 2020 as well. So that's another potential area of support here as well. And then further below here, 12,500, which then brings us back towards 10,000, which those of you who were following Bitcoin all those years ago will remember was a major level as far as the explosion high that we saw in Bitcoin and the headlines it was creating and the types of volatility that we've seen in these markets at that point in time. But 10,000 at the time was seen as a major significant level, as was 20,000, of course, as well. So there's a number of levels that lie between 20,000 and 10,000, which makes this one very different from 30,000 to 20,000, which could potentially slow any declines that we do see to the downside, even in these troubling environments. Now, that said, this is a very headline-driven market. I do expect there's probably going to be more headlines as far as Bitcoin is concerned based on what we've seen in recent weeks, which could make for a lot of volatility, and especially, like I say, against the backdrop of such a difficult environment as far as broader financial markets are concerned. But I think the fact that there are some support levels there could make for a little bit more two-way price action than we've been witnessed over the last couple of weeks.